Everybody's talking about lower interest rates for 2024. I'm going to tell you why that doesn't even matter. There's article after article of people saying that the Fed's going to lower rates next year. So whether it's the Wall Street Journal, Forbes, or an investment bank, there's obviously varying opinions on whether or not rates will go down, and I'm sure you have your own. No surprise that the people that need rates to go down, people like home builders, Realtor.com, Zillow, Redfin, etc., all are projecting lower rates next year. If your bank, like Bank of America shows here, you're also projecting interest rate cuts because they need them. Banks make money when people borrow. So whether you think they're going up, going down, or going nowhere, I'm going to show you why I don't think if they go down in 2024, it's going to even matter. The first thing that I want to discuss are all the federal rate hikes from 2022 to 2023 as they started to tame inflation. On March 17th of 2022, the Fed raised their federal funds rate by 0.25 to try to combat inflation. And this chart represents not only that increase, but all 11 increases as they've continued to combat inflation. Of course, the Fed's target is still 2%, but today remains about 3.5%. Each rung of this ladder is going to represent 0.25% or a quarter percent. Traditionally, the Fed goes up or down 0.25% first as they start to test the markets. So now let's just look at 2022. In January of 2022, inflation was at 7.5% and the Fed did nothing. So when you hear people say that the Fed started too late, this is what they're talking about. What they're saying is the inflation rate was already at 7.5% and the Fed did nothing. In March of 2022, Fed increased the federal funds rate by 0.25%, going up effectively the first rung of the ladder. And by the end of 2022, the Federal Reserve had raised the rates 7 times, but only brought inflation down 2%, and it still sat at 6.5%. And to the right, you can see all the individual increases. What I really want you to focus on here is what happened in the last half of 2022. During this period of time, the Fed increased interest rates 3%. They backed it off a little bit in December of 2022 to 0.5%. So by the end of 2022, the Fed had effectively raised the federal funds rate by over 4.25%. The point here, of course, was to tamper inflation. For those of you who may or may not know, the federal funds rate is the rate that the banks borrow at. And there's typically a spread above that they charge to the consumer. So obviously the cost to borrow went up significantly during this period of time, and everybody started to pull back, especially real estate investors. So now let's jump into 2023. The Fed increased the federal funds rate by 0.25% 4 additional times. All in all, the Fed increased rates over 11 times in 1.5 years. So currently the federal funds rate is sitting from 5.25 to 5.5%, but what it really represents are 21 increments of 25% increases for a total of 21 increments of 0.25 each. So why is all this important? The reason these 21 increments of 0.25% are important is because the Fed, as they look at lowering rates, are going to come back down in those increments of 0.25%. So you can't just look at the 11 rate increases. You have to look at the 21 increments of 0.25. So just imagine for a moment that rates go down in 2024 by 0.25% 3 or 4 more times, which is what Joseph Wang, who worked at the Fed, suggested in my most recent video. What would happen to real estate investors if these rates went down like everybody wants? Probably not very much. Mortgage rates might go from 7.5 to 6.5, for example. That's not going to do very much. Or maybe they go from 6 to 5. That's still not going to do very much. When the majority of America has mortgages under 5%, this is not going to move the needle for them. Lower rates could help some commercial real estate investors, and it might spur some people to buy. But generally, a full point decrease in the rate is not going to move the needle for real estate investing. For those of you who might think that rate cuts might be a little bit more than that, I went back and looked at the federal rate cuts in 2008 and 2019. In 2008, the genie was out of the bottle. The banks were taking back so much real estate, and during this time, you can see they lowered rates aggressively so people would start buying those toxic mortgages and commerce would begin again. I went through that time, and in just a period of 2 months, they lowered by 2%. More recently, in 2019, the Fed lowered on 3 consecutive meetings 0.25, which is normal and consistent in their history. And to the right, you can see the federal funds rate at that time. So the real question is how much will the Fed lower rates next year, if they do at all? There are a number of factors that you need to consider. One is that the Federal Reserve is still not near the 2% target rate for inflation. So the stronger the decrease in the rate, the more probability inflation will ensue again. So more than likely, if they cut at all, it's going to start off slow at 0.25. And they'll continue to watch inflation as they roll out future cuts, if any. One of the key factors that fuel asset bubbles is, of course, the availability of cheap money. That's what got us into this problem in the first place. When interest rates are low, investors may be more willing to borrow money to invest in assets as the cost of borrowing is lower. This can lead to an increase in demand for assets, driving up prices and contributing to the formation of a bubble. So this is exactly what got us here in the first place. So the other wild card here, of course, is the dual mandate that the Fed has with regard to full employment. So one thing to watch, of course, is if unemployment moves up, spending goes down, and that means that the Fed would probably more aggressively lower rates again. At the moment, no one is predicting that because unemployment is sitting at about 3.5%. But of course, we also have an election year, and things can get very political. So I do believe, as I did in my prediction video for 2024, that rates will come down slightly. But as I said in the beginning, I don't think it'll be much. I think it will be political, and I don't believe that these lower rates will have any impact on the real estate market in 2024 at all. Get ready for the new normal.